Hello everyone and welcome back. This is the 9th video in the series of Let's Invest, and today I'm going to talk about mutual fund selection. In the last video, you would recall that I had discussed how to select certain stocks. So it may be difficult for you to decide whether you should invest in mutual funds or stocks. Let me make the decision a little easier for you. So how do you choose to select either in stocks, directly in stocks, or in stock mutual funds? Well, here I have listed down certain differences between direct stock investing and mutual fund investing. If you're investing in direct stocks, then your money gets concentrated in very few stocks that you select and invest in. You have to actively monitor your investments and you have to bet on your own knowledge for investing. Whereas when you choose to select mutual fund investments, you get a whole lot of choices. You can invest in hybrid mutual funds, you can invest in equity mutual funds, in tax saving mutual funds, etc. etc. Your investment can be as low as 100 rupees per month, though most of the mutual funds require you to make an initial investment of 5,000 rupees. Your fund will be professionally managed by professional investment advisors or asset managers, and the fund will be very well diversified. So that is why I recommend that for investors who do not have a lot of time to research, they should try and invest in mutual funds rather than selecting individual stocks. Let's now move on to seeing what all parameters are the basic things that you need to cover before you decide on which particular mutual fund investment to choose. One of the websites that I find convenient to research mutual funds is Funds India. Now you can use Money Control also for looking at funds. The only reason that I am going to Funds India is because I want to give you a different experience as compared to what I did in stocks. So I am an account holder with Funds India, and this is my account detail. When you go to invest, then you can get the option of investing in mutual funds, stocks, fixed deposits, bonds, etc. Because we are investigating mutual funds now, so I'll go to the mutual funds tab. You will see that this website is recommending me different kinds of funds, which are equity funds, hybrid funds, debt funds, and tax saving funds. Now I have my own option to decide where I want to invest. Let me go to equity funds because I feel that as per my age, my risk-taking appetite, and my financial condition, I can invest in a little high-risk options, and equity funds will be good for me. So here you can see that there is a list of moderate risk equity funds and high risk equity funds. So let me give you a brief quick overview on one of the funds in moderate risk and one fund in high risk. So let's look at this first fund, Access Equity Fund. On the screen it tells you what is its rating. 5-star rating is considered better than a 4-star rating. And here are the returns. So you have 5-year returns, 3-year returns, and 1-year returns. So let me go to this small tab which takes me to the scheme details in the Access Equity Fund. When I go to the details, you can see that it tells me that this particular fund invests in large cap. Here has been its summary of returns. I can go down further to see what are the top 5 holdings and the top 5 sectors. So this fund invests in banks, IT, pharmaceutical and drugs, engineering and automobiles. By investing in this fund, I will have invested in HDFC Bank, Larsen & Toubro, Infosys, Z Entertainment Private Limited, Housing Development Finance Corporation, HDFC, many other equities. If you go down further, you can see that what are the benchmark returns and what has this fund yielded. So you can see that in the past this fund has given better performance than its benchmark. The fund has also had negative returns in 2011. Negative returns to the tune of 22.555% is a lot. So that means if I had in 2011 1 lakh rupees invested in this fund, then I would have lost 22,000 rupees. So you need to ask yourself whether you have that kind of risk-taking ability. You can go down further to look at the quarterly results, the SIP performance. So what is the performance of this fund? Had you been investing at regular intervals, regular monthly intervals, then what return would you have expected? It also tells you roughly, if you invest 1000 rupees a month in SIP, then how much would it have become in 5 years, 3 years and 1 year. You go down further to see a quick peer comparison, the ratings of the peers, their current net asset value and their respective returns. You can also look at a little more detailed holding of this particular fund. So if I was to invest in all of these shares, then it is better to buy this mutual fund rather than investing individually in these particular securities. You need to go down further to see what is the expense ratio of this fund. The expense ratio is 2.32. That is, this is the management fees which will be charged to your account for managing this fund, for buying the securities on your behalf. The minimum investment that you need to make in this fund is 5,000 rupees. The exit load will be 1% if you try to take out your money before 12 months of investing. The minimum investment in SIP that you need to make is 1,000 rupees. So it also tells you what is the eligibility. That means who is eligible to invest in these funds. So this is what you need to review before you invest in this Axis Equity Fund. If you are happy with it, then you can go ahead and invest. Let's quickly also look at one of the high risk funds. This is the first one in this series. You can see that it has got a rating of 5, which is really good. These are the returns. Now it will be very foolish of me to think that if this fund has given 42% in the last year, then in the next subsequent years also it will continue to give 42%, because the past performance in shares and mutual funds is not a guarantee for their future performance. You cannot guarantee that this fund is going to give such returns in the future also, but it can give you some kind of comfort that it has been giving positive and good returns in the past. Let's go into the details of this particular fund. Now, these are the details of BNP Paribas Mid Cap Fund. This fund invests in mid and small cap. These are the returns of the last few years. These are the top 5 holdings in terms of shares, which is Idea, Bharti, IndusInd, Welspun and Ramkrishna Forgings. Top 5 sectors are telecom sector, pharmaceutical and drugs, banks, consumer foods and engineering. Here it tells you how the fund has performed compared to its benchmark. What have been the fund's returns? Again, you can see that in 2011 the fund gave negative returns. Then what is the SIP performance if you had invested in SIP in this fund, and how the money 1000 rupees invested per month would have turned out in value after 1 year. You can see here. You can also see a quick peer comparison, their ratings, their current net asset values and their past returns. Further down, you can see the top 10 holdings of this particular fund that we are looking at. You need to go down towards the bottom to see the expense ratio. Now you can see the expense ratio of 2.83 is a little higher than what we saw in the previous fund. The minimum investment is again 5,000 rupees. There is also an exit load if you want to take out your money before 1 year. There is no exit load if you want to take out your money after 1 year. This is what the kind of people who would be eligible to apply for these funds, and the initial SIP value is 1,000 rupees. So this is about this fund. If you're happy with it, then you can invest in it. Now you can see that I took you through 2 funds, Axis Equity and PNB Paribas. Between just these 2 funds, they are covering a vast range of equities. It is covering small cap, mid cap and large cap. So just buying these 2 funds, you will be very well diversified. However, what you have to consider is the load, the exit load and the expense ratio. Are you happy with paying that 2.3%, 2.8% for management of your fund? Are you happy with keeping your money with the fund for at least 1 year? Because if you take it out before that, then you have to pay an excess load of 1%. So you have to ask these questions before you invest, and make sure that you don't invest in all similar kinds of funds. So if I invest in 3 funds and all of those funds are investing in small and mid-cap securities, then I'm only really fooling myself by saying that I'm diversified by investing in mutual funds, whereas I'm not, because all of my funds are investing in the same securities. And if those sectors or those securities were to go down, then my entire portfolio is going to crash. So I hope you are now comfortable with what all parameters, basic parameters that you need to see in mutual funds before you invest in them. Let's now go back to our presentation. I hope you liked this video and the easy way of selecting mutual funds. Thank you very much. I really enjoyed giving this video to you. Please ask me any questions if you have. You know how to reach me. Thanks a lot. See you in the next video.